Welcome back to Squawk on a Monday morning. China's state media recently reported the country would set up an exchange to trade the increasingly lucrative metals known as rare earths. Add to that, plans Beijing also has to consolidate the industry in the next 2 years. Will China's moves help or hinder scarce rare earth supplies for manufacturers outside of China? Well, for more, let's talk to Mike Elliott, global mining and metals leader, Ernst & Young, joining us live from down in Sydney. What's the short answer to that question, Mike?
Well, I think the Chinese certainly are going to take a much more active role, and it is going to impact exports over the next couple of years, Martin.
Okay. At the same time, though, in terms of what we're talking about is price pressures because of a huge supply squeeze, but not every. I mean, people aren't blind. There is I guess, a huge buildup of supply or capacity set to come online. How is that shaping up?
Yeah, well, certainly the high prices over the last couple of years has certainly attracted more people into the rare earths market, and as I've discussed on your programs earlier, this is historic reasons behind this. In many ways, the Chinese were producing rare earths as a byproduct, which was keeping the world prices artificially low. Now that there's becoming much more of a use of these, or greater demand for rare earths, we've now seen prices high enough to actually attract new investment outside of China. And despite their name, they really aren't as rare as people think. However, there is a time lag for that new production to be brought online. Two particular projects are imminent to come online. There's the Australian company Lynas, which has its Mount Weld project, which is now producing rare earth concentrate and is awaiting completion of their separation plant in Malaysia to be able to actually produce the final separated elements. And also we find that we've got Mountain Pass in the United States. To combine these two mines, when they're at full production, will probably reach about just over 20% of world supply in the next couple of years.
That Lynas project that you mentioned, there's been protests outside the facility in Malaysia. How big a risk is this that there will be community dissent about these types of projects?
I think, Karen, obviously any new project with new materials is going to undertake quite a degree of local consideration in terms of what are the impacts on the local community. These are some of the risks that are probably going to affect the timing of supply. As always, I think what we've seen in a lot of commodities, and rare earths just another one of them, I think the forecast of when this production is going to hit the market is the most vulnerable piece of this. The demand that we expect to see of rare earths is only going to increase. Electric cars, the use of magnets in wind turbines and things like that is just going to really underwrite the increased demand in coming years, and that's precipitating a lot of the Chinese actions we see to date. And so the supply response is probably the critical element, and that's going to result in the short-term issues in terms of what's going to happen in terms of the supply gap and what that's going to mean for pricing.
And Tim, when it comes to risks around some of these projects, Mike, you've also raised in your report that financing is a challenge. Are you telling us investors are a little bit wary about giving capital to these companies because of the string of challenges they face?
Well, I think we've seen in recent times some very large equity raisings by rare earths producers. So in people who are prepared to take that risk on an equity perspective, I think we're actually seeing the availability of that for both exploration and development of new projects. Debt's been a different issue. I think some of the traditional lending sources haven't been there necessarily for rare earths. What we've probably more seen is customer involvement. So, for instance, the role of some of the Japanese trading houses in providing debt finance to be able to facilitate some of these new projects has been most critical.
Mike, just very quickly, there just seems to be a multitude of rare earth miners right now. A lot of them are not in production, they're just on the exploratory stage, and yet when you look at their valuations on the stock market, they're looking very, very top heavy. So how do you separate the wheat from the chaff here in the sector?
Yeah. Well, as I said before, Sheree, I think what these high prices has attracted probably the underinvestment that's probably taken place over the last 10, 15 years. So there's been a real rush in there. In many ways, I think what our report highlights at Ernst & Young is that we're saying that the race is really on. When you can see two mines bring in just over 20% of the world's supply, there isn't that much room for many new mines to come into this market. So it's really going to be those producers that are able to get into production earliest, and we really see a separation between those those that move to actually producing a concentrate and those that will actually be in separation. And we think there's going to be a push for some producers to get into the concentrate much earlier and therefore be able to raise the necessary finance for that.
Mike Alec from Ernst & Young, thank you for joining us. Much appreciated.